Hi, I'm Alex, welcome to the channel and thanks for tuning in. So in today's video we're going to be talking about Golden Nugget Online Gaming again, but this time specifically around what the valuation could be. I'm going to run through some analysis I've done, what the main findings of that are, and ultimately what that means for the valuation. Now, spoiler alert here, it comes out to around $65, however stick with me, let me explain that to you and help you understand how that is a realistic price target. As well as that, we're going to talk about a couple of other things which no one else is talking about at this point in time. So this is definitely not one you want to miss, so stay tuned. In this video we're going to talk about the legalisation of online gaming in states in the US and why that perhaps is going to happen quicker than people are expecting. We're going to talk about the potential of a post-merger dip in valuation as we've seen with many other SPACs this year. And we're going to talk about a load of other things. So this video and this analysis has taken a lot of time to put together. So if you like it, please smash the like button, it's so helpful in pushing that channel to a wider audience. Even if you're only liking this video for the fact that the bar charts in these charts I've created match those that are in the investor presentation, then I'll take that. Yep, double check it, they do. If you're new to the channel and you like investor related content, then hit that subscribe button. And as always, I'm not a financial advisor, this video is purely for educational and entertainment purposes only. However, I feel it's always more important in these videos to make it clear, always do your own analysis. The numbers that I've got from my analysis are just purely a function of the assumptions which I've made and of the data that I put into that model. So please do your own diligence. So look, there's three main pillars to how this share price growth can be achieved. And I'm going to go through each one in detail. If you're not interested in that, then feel free to skip. However, I do touch on a couple of things which I think everyone will find quite interesting. Number one is the completion of the merger. So currently, if you compare LCA to DraftKings, for example, LCA and Golden Nugget is trading at a massive discount to DraftKings. And when I talk about discount here, I mean on the basis of an enterprise value to sales multiple, the most meaningful metric when you're looking at high growth businesses in this sector. DraftKings is trading at a forward sales multiple of around 24.5 times, whereas LCA is trading at only around 12 times. Part of the reason for this discount is because the transaction hasn't yet completed. There's definitely a risk, whilst very minimal, that the transaction may not complete, and many investors are not able to invest in SPACs until that merger has been completed. In my other videos I have touched on why I'm very confident that this transaction will complete, so definitely check those out if you're concerned. However, once the transaction completes, it allows a new investor to come into the business, those which couldn't before because of their investment criteria. It will eliminate that transaction risk and the execution risk, and ultimately it should enable LCA, as it will be Golden Nugget Online Gaming, to trade at a similar level, if not a premium, to DraftKings. Now looking at the two models, online casino gaming is a lot more resilient, especially to the health crisis, than sports betting is. And if you look across sectors, the more resilient business models are those which trade at a premium multiple. So there's potentially even some upside here. However, the main takeaway here is just from the transaction completing, just from those new investors being able to invest in Golden Nugget and Golden Nugget trading in line with DraftKings, that increases the valuation on a per share basis, in my analysis, by around $22. That's massive, and from where the share price is today, that's more than a 100% increase. Now, pillar number two in the increase in share price is all around the existing growth. Now we know this year Golden Nugget's had an amazing year in terms of beating its investment plan. If we just assume conservatively that that growth continues and that outperformance continues into next year, which on the basis of the continued ongoing health crisis I think is a fair assumption, assuming this incremental revenue is valued at the new uplifted valuation multiple for Golden Nugget Online Gaming, that ultimately drives a further increase in the share price of around $15. Now this is even something we can keep an eye on as it develops. New Jersey releases their gaming figures monthly, and if November and December are good, that will give us even more confidence over the outperformance, and that this part of the analysis and the increase to the share price is justifiable. Now the third pillar that we're looking at this part of the analysis is all about the known state expansion. That's the states that Golden Nugget Online Gaming has said they're targeting, Michigan and Pennsylvania. Now both of those states have larger populations than New Jersey. However, conservatively assuming that they are at the same level that Golden Nugget Online Gaming was in New Jersey after 3 years in those two states, relative to the population, and then applying a 3-year forward sales multiple, as one has to do to make sure you're comparing apples and apples, that drives a per share increase of around $8.80. Now, it could be argued that this is actually fairly conservative. If you look at how they grew in New Jersey, a lot of it was from developing new products, building its brand reputation. Now, those products already exist, and so personally I do believe scaling into those markets will be a lot easier and will be faster. However, I've not assumed that for this analysis, and so if you do believe that, that would all be further upside to that valuation. So that's addressing the known markets. Now, there's the really exciting part of the unknown states, the states which have not yet legalised or not yet stated they're going to legalise online gaming, ones that Golden Nugget aren't yet targeting. Now there's a real possibility that these states actually allow and regulate online gambling a lot quicker than expected and a lot quicker than anyone thought. Now there's a real reason for this, so please hear me out. Currently, a lot of municipalities and a lot of states are in financial difficulty, primarily caused by the health crisis. Now, a way that they can increase their income is obviously by increasing tax rates, but that's not particularly popular. Online gaming brings massive tax revenues into the states which allow it, and it's quite an easy and effective way for states to increase their revenues without having to make the unpopular decision of increasing tax rates. Personally, I think this is going to accelerate the rates which other states look at online gaming and look at regulating and allowing it. And ultimately, all of that is great news for Golden Nugget Online Gaming. It's almost a perfect storm. Now, with this in mind, I have done some analysis which looked at if online casino gaming was to be legalised in all the states which currently allow sports betting, what the impact would be on Golden Nugget's share price then. Now, if you're interested in seeing that analysis, please let me know in the comment section below. I'll do a separate video on it, but I honestly do not think you'll believe it. It's unbelievable. It's really, really exciting. Now, the other thing that I see a lot of people talking about and a lot of people discussing is, will there be a dip in the share price post-merger completion? Now, personally, I've said it before, it's not something I'm massively worried about. I'm investing in Golden Nugget Online Gaming for the long term. I have a long-term vision, and a dip in the share price, if it does happen post-merger, is not something which concerns me unduly. However, I think there's schools for and against this thought. The argument for the dip is that obviously a lot of people have been very frustrated about how long this transaction has taken to come about. So there's the real possibility that a lot of people are invested in this purely for the short-term catalyst, for the merger to happen and then for them to sell and find the next SPAC. So yes, if there is a lot of that and those shareholders sell, then that will drive a dip in the share price post-merger. However, if you compare the investor base of LCA versus many other SPACs, there's a lot greater institutional investor proportion within LCA. Those are people who are not catalyst driven, who are not trading around the merger date. And so perhaps that decreases the likelihood of that post-merger dip happening. The other argument against the dip in the share price post-merger is the fact that there is a lot of news expected out of new states regarding online casino gaming legalisation. Does this continued positive news flow offset the risk of people selling their shares? Look, I think it's really hard to make a call what will happen here. However, long-term investors, I think, can still be really excited by the future. So look, that's it for this video. I hope you enjoyed it. If you did, please smash the like button. If you're new to the channel and you like investor-related content, then subscribe and join the channel. And as always, please let me know your thoughts and comments in the comment section below. I find it so interesting seeing what everyone has to say. But thank you so much for watching, and I'll see you in another video.